Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Alexander Blum, co-founder and managing director of 2Prime, an investment firm specializing in digital assets, to discuss institutional adoption of Bitcoin, prepping clients for volatility, and hedging strategies. Alexander, it's great to meet with you. Welcome to Trade Talks.
Thanks for having me. Great to speak with you.
And Alexander, many of your clients are longtime investors, and this is the first time that they've dipped their toes into digital assets. Why are they getting interested now, and how much of their portfolios are you allocating?
Yeah, I think there's two aspects of it. One is just as the market cap of Bitcoin and cryptocurrencies grows on the whole, it just becomes an undeniable long-term asset that people are going to have to add to a portfolio beyond the kind of typical 60-40 mix. And then obviously the returns of Bitcoin, the best risk-adjusted returns over the last 1, 3, 5, and 10 years make it a difficult thing to not want to kind of get some exposure to it. You know, standard deviation compared to return, it's just a great add to pretty much any portfolio.
And let's talk about that Bitcoin and the move. Do you think it's overdone at this point, or what's your longer term outlook?
Yeah, so if you look at historical trends, typically there's about a 16x to 20x move up every 4 years or so based upon supply and demand dynamics around the production of new Bitcoin called a thing called the stock to flow model. We're right in another one of those bullish cycles of which we're only about 4 or 5x up from the previous all-time high. I expect if it follows historical trends, we're going a lot higher than we are currently.
So how are you preparing clients for volatility within this space, and what are some of the hedging strategies you're recommending?
Yeah, so at our fund, we're just using options primarily to hedge out downside risk. It's a known aspect, I would say a feature, not even a bug of Bitcoin, that it has volatility. If you accept that and make use of it, it actually could be a profit center. Basically, as we move more into this bull cycle or see large outside standard deviation moves, we add more put protection by selling out of the money calls. The way that's expressed is a little bit more complicated than that, but basically buying put protection on the way up, trying not to miss too much of the upside and getting ready for some big downside moves eventually.
All right, and let's switch gears and talk about Ethereum for a moment. JP Morgan, MasterCard, UBS just invested $65 million into the Ethereum development studio with Consensus, which is more big news for institutional involvement in the space. And while Bitcoin has enjoyed a massive run, Ethereum on a percentage basis year over year, it's up 1,400% versus 840-ish% for Bitcoin. It appears that investors also want to invest in the technology behind DeFi.
Yeah, absolutely. I think as bullish as I am on Bitcoin, I think I'm even more bullish on Ethereum in the sense that the market cap currently is much lower. So there's just a lot more room for growth, and the diversity of what Ethereum can do and how it's being used is going to be the financial infrastructure of the future. We see Visa just announced they're using Ethereum to settle USD transactions, and we're only going to see it grow in uses. DeFi, as you mentioned, and pretty much every application is being built on Ethereum. There's a huge development community around around developers building on Ethereum as well, and it's kind of a force in nature at this point.
All right, Alexander, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.